Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That is drstoxx.com. And if you want to join me and an amazing group of traders of all skill levels, everybody from brand new newbies who haven't traded a stock before to those who are trading it full time, and everybody in between, go to the subscribe menu on our drstoxx.com site. Scroll down to the live trading room. And if you want to add on the brand new, or fairly new, we're actually coming up to the end of our first year. Live options room, you can do that at a 40% discount. We've also got stock pick advisories, daily and weekly stock pick letters. I'm the one who does that. I'm the only one who does that. I manage the rooms myself. It's just all Dr. Stoxx stuff. And if you're interested in that, please feel free to join us. All right. Now, here's what I want to do today. So we've got a lot on the plate, and I don't have a whole lot of time. And I want to save some time for chart requests. So I'm going to take a quick look at the indexes. Here we are on Friday, and the whole world was coming into today's session with two big concerns. One is the non-farm payrolls, the unemployment rate, how many new jobs have been created in the economy. It was a low number. Market is okay with that. If it was a big hot number, it pushes the Fed back on the brake, and we didn't really want to see that. So and it also boosts inflation and other kinds of things and labor costs. A low number below expectation, about half of what it was last month, was welcomed by the market. That's a good thing. It's kind of a Goldilocks figure. It wasn't a negative number, and it was a small positive. And the unemployment rate ticked down one notch as well. That's always good, right? Good sign for the economy. The economy is firing on all cylinders. Huge GDP. Jobs data is okay. Jobless claims are in line with good, strong, healthy economy, nowhere near recession levels. ISM services came in above expectations. That's also good. And there was one other thing that, the consumer numbers that came out this morning, also very good. People are out there spending money, still spending money. So the economy is in a good shape. That means the market is in a good shape as well. And the other thing that the market was concerned about this morning was the Scotus ruling on tariffs. So everybody is expecting them to do something negative about tariffs. And in that case, and what they did today was they just pushed the can down the road. We're going to get it on Tuesday next week rather than today. I kind of thought that would happen. Either we would kick the can down the road and delay, or we'd get some sort of a mixed ruling. And I think that's probably what we're going to get on Tuesdays, a kind of a mixed ruling, which means that, the tariffs themselves, I don't think the legality is actually in play because it's based on a 1977 Emergency Powers Act. And I think the president was in his jurisdiction in employing that act. However, what it does is the separation of powers, the constitutional separation of powers is the thing here. And Congress usually weighs in on anything having to do with foreign trade, and they weren't. They were just not in the loop at all. It was just all about the president. So I think what they'll probably end up doing is saying, we're going to scale back on tariffs because it's not exactly illegal, but it's not exactly done in the constitutional way. We're going to say these tariffs over here are okay. Those tariffs over there, not okay. And these tariffs here in the middle, we're going to scale down maybe on a percentage basis. What we really don't want is to have to give all that tariff money back. And here's what would happen in that case. The deficit, the trade deficit goes way up. Our federal deficit goes way up. And then what you're going to see is the Fed pumping money like crazy, and you're going to see yields go up, and you're going to see mortgages go up, and then you're going to get inflation. We don't want any of that. However, I do think that because the economy is so good, and because that's not likely to happen, I think whatever does come out on Tuesday is going to be digested pretty well by the market. We might get a little bit of volatility for a day or two, right? But as things settle down, if we go down, buy the dip. If we go up, hold and don't sell. That's the mantra. All right, here's the S&P 500. We are up at all-time highs, and you can see a nice little, this is, oops, I don't want red there. Let's go with green, shall we? Oh, no, let's go with black. So you're seeing a nice little inverted head and shoulders. The neckline has already broken. It came back, right? Here's your break. It came back and tested it and the 21. And now we're starting to play out this big pattern. And the pattern is, let's see, 65.50 on up to 6,900. We'll just round it off for 350 points. You add that to the neckline break, and that's it. We'll call it 72.50. 72.50 is the target price. I don't think we're going to get there anytime real soon. My map for 2026 is we're going to get some nice rips. We're going to get some pretty significant dips. We're going to be in a trading range for the most part, probably into mid-April. I think summer might be a little bit more volatile, a little less robust. And then we're going to get a really nice 3 to 4 months at the end of the year. That's my map. And I don't think it's going to be a huge year, not like 2025 was, but maybe if we can eke out an average year, right? 7 to 10%. So it's a midterm year. I said this on the IBD podcast. Midterms tend to be the least, the 1 year that does not outperform the market in the presidential cycle. It averages about 2% per year. And most of your really bad years happen to be midterm years. But I think there's some reasons why the market will be okay with whatever happens in midterms. But because that is it is an unknown and an uncertainty in the market, it's a kind of wrinkle. I think that we'll price that in the summer, and then we'll probably get a locked Congress, which markets usually like, and then we just rip for the next 3 or 4 months after that. So that's kind of where we're going. But as I always say, we trade the market we have, not the market we want, or even the market we expect. And we trade day to day. So we let the market tell us today it's very happy. We are very happy because we bought a bunch of stuff earlier in the week on a lot of the dips and added a little bit more early this morning, and everything's just up and nice and green for us. Okay, pretty much the same story with the with the NASDAQ. However, because the NASDAQ is a smaller, how do I get that? There you go. Because the NASDAQ is a smaller index, it won only 20% the size of the S&P because it's heavy weighted with the mags at the top. And the mags have not been doing all that well as a group. Okay, Google's good. There's Google. Really, that's about it. But everything else is, I mean, Amazon is actually doing pretty well too. It's ripping higher. We're long Amazon calls. We were long Google calls, but I sold those too soon, as I often do. But the rest of the mags are just not that great. Now, I do have a couple of mags on the greens list. I'll show you those in just a minute. No, so that's to say that we're not up at all-time highs with the NASDAQ as we are with the S&P, but we're starting to get there. And today's a big ripping day on very good volume. And you can see this doesn't really have the same pattern. I mean, I guess you could kind of call it that. But I think it's more just kind of a continuation, what we call a continuation cup and handle. And it's pretty much the same principle. You measure the depth of the cup, you add it on to the neckline, and that's going to be your target. I don't think we're going to get that target until the end of the year. Same for the 7250 S&P 500. I hope I'm wrong, and I could very well be. But that's kind of the path of least resistance. So we're long small caps. I like small caps a lot. It's been doing great. And that's a function of the healthy economy. It's a function of AI making smaller companies more efficient. And they're able to streamline some of their workforce. Not so good for the employment, but it is good for smaller companies. And their margins are getting bigger. They're not going into debt to pump up AI because they're not hyperscalers and they're not data center owners and they're not supplying energy for other companies. They're taking advantage of those things to make their stuff cheaper to make. And so there you go. You've got a nice cup and handle breakout, and it's just up and up and up. And I think 2,700 is probably the top of this current move. And let me just say a little bit about cycles. I've been contacting just this morning, after about a week of not talking to him, talking to the cycles guy, and he has pretty much of a same pattern. He does see the rest of the month being pretty good, next month being harder to trade, more of a pullback. He doesn't see anything major, just, standard back to 21 EMA or 40 SMA, and then march back up again, but not new highs. So he kind of sees the same slide lower into the summer. That's just what the cycles are saying. And of course, cycles, like all technical indicators, are dynamic, and they crunch current price. So when current price does something unexpected, the cycles can shift a little bit. But that's what he's seeing right now going forward. So as I've said it many times, I think we've got another week, maybe 2 weeks, of some modestly bullish resolve to any little dip. And then after that, we'll have to get a little more defensive, I'm pretty sure. So we are short Bitcoin, which has been the good trade so far. We've been short Bitcoin since the reversal at the 50 period moving average. And this is just technical analysis 101. When you're in a downtrend and you come up to a major moving average and reverse, like it did a few days ago, that's typically a sell short sign. I still have a 75K target for Bitcoin, but I did say this morning that if it hits 85K, which is this line of support right there, if it hits 85K and bounces back up, that may be it. That may be it for the pullback in Bitcoin. But I still think 75K is incoming. So Ether, same principle, downtrend, 50 period moving average, big reversal bar, and we're also short Ether. So 1500 is where I think it could possibly go, but it has the same structure here, and that number is 2750. So if it hits 2750 and bounces back up, then probably not going to get down to 1500. We are still long gold, and it's just a hold. Just keep holding gold. Hold gold, don't sell it. And same is true for silver. We're long silver as well. Now, silver's been a little more active on a day-to-day basis. And man, if you are nimble day trader, you can get down to the 10 or 15-minute chart and buy these buy the dips that come down. Here's a 2-hour chart, which I like to trade for. I like to use this for entries, not so much exits, but entries. And right down in here, it gave a very nice buy signal, uptrending LRC, pink zone, reversal back up, and yeah. So we got long AGQ. I'm not sure if it was all the way down there, but it was on the lows, right? It came down to AGQ came down to 175. AGQ, yeah, it was 175. 175 said if it hits 175 and holds, no, I'm sorry, it got down below 175. It's like 167, I think, overnight, and then about 170, 171 is where it opened. And I said, hey, if it gets to 175, we'll probably buy it. Well, it got to 175 and it stayed there for 10, 15 minutes, and we bought it. Now it's 195 the next day, or 2 days later at least. Anyway, so silver is hold. I told you all the reasons why on the IBD podcast. The pressures on price right now are just phenomenal. And with the AI demand and the EV demand and the solar panel demand and the crunching in supply because mines, they're just so hard to open up new mines because of all the regulation, then silver prices are only going to go higher. Yeah, you're going to get some dips. Yeah, you're going to get some volatility along the way. But man, if you can just keep it, your sizing small, give it some space, I think you're probably going to see AGQ up in the upper 200s by the end of the year. I'm not trading oil, not interested in oil, not interested in natural gas either. I missed a really good trade in, it was right here, right there. We were long oil for a few days. We took a decent little profit on it, and glad we got out because it hit the 21 period moving average. Let me expand this a little bit. Tag the 21 from below and reverse right back down again. That's when we got out. And I had half a mind to get us into KOLD as a reversal play, and it didn't, and then it was all downhill from there. So I think that's where we played it. Correct me if I'm wrong. But anyway, we missed the trade in coal, and it's not a trade in long. It's not a long yet either. We'll just let it go. Okay, now let me show you my greens list because I just updated this. Why don't I have... Oh, you know what? When I rebooted, I forgot to save. Oh, rats. Because I've got some stocks on here that I already deleted. Oh boy. Well, okay, I'm going to delete this and this one, and I don't want that one. and I don't like that one. And we're long that one already, so I'll take that one off. APLD just, it's the star of the day. I trimmed a little bit of mine this morning or during the lunch break, and now I totally regret doing that. PLTR should not be on there, and Monster were long calls in the other room, and there's a whole bunch of other greens. So I better go to the mags. I apologize, but I'll find some of them because I remember the ticker symbols. So we'll do this worst to best. Netflix is still a total no-go zone, and it has been ever since it broke the 108 support level. Just stay away. And if when a company gets decent news and it still goes down, yeah. And guess what? Netflix is it Netflix? No. Maybe it's Apple. I think Apple is trading as of yesterday at the second lowest RSI in the S&P 500. Of all 500 stocks, Apple is the second lowest, which means that, yeah, it's oversold. But if it just keeps going down, the RSI can stay oversold for a long time. Netflix is like the third or fourth from the bottom. It's also very low. And yeah, just, you can trade low RSI if you want, but you got to do it in an uptrend, not in a downtrend. All right, Netflix is a no-go zone. I do like Qualcomm, and it should be on my greens list. That's one. So we're long Qualcomm somewhere. Calls. We're long calls in the options room. It's not the best looking setup, but if we get rid of that, because that already played out, it is. Here's a big OpenAI or government contract or something. Big news shot way up there, and we've seen so many of these. Intel, Oracle, right? They shoot way up 20, 30% in a day on either OpenAI or a government contract or hinting at something, and they haven't played out. They haven't held those gains. Now, Intel's coming back. That should be on our list as well. But what I like about this is that it is in an uptrend, unlike most of the other mags. It is showing a bullish continuation pattern. It's not the healthiest uptrend out there. You can see the 21 is kind of squirrely like a roller coaster. You don't really want to see that. It's dipping below the 50 at times. You don't really want to see that. So it's not the strongest uptrend, but it is an uptrend, and it is among the mags, and it's one of the rare mags to show an uptrend. And now it's starting to break out of this nice looking continuation cup and handle. And that should bring it, say, 160 to 184. Let's call it 20. And 180 plus 20 is 200. So this should get up to about 200. And we're playing that with calls. AMD, I think we're close to a buy signal on this one, but not yet. See, got up to the 50. It's not in an uptrend. It's not in a downtrend. It's in an uptrend. So you can play the oversold condition in an uptrend. That's a good thing to do. But right now it's down at support, and it's not showing any sign yet of getting some buy pressure. One thing you can do, by the way, when it's, especially if it's gone way up, and then you have a couple of days of really big selling pressure, and you're kind of thinking, hey, is that it? Well, one thing you can do to catch a pullback like that is go over to the 2-hour chart. Now, usually you want to see the LRC of the 2-hour chart, and also in an uptrend. This one is not. That's one red flag, and it's just still coming down. So AMD looks to me like more it wants to crack through that support line like it did a few days ago and over here than to bounce. If it gives me a good green stick on a good volume, and then I'm interested, but not today. Microsoft, we have some long-term shares of Microsoft in the live trading room. It's starting to look a little bit more constructive. At least it's building this base, right? We've got about a 6-week base, 5-6-week base down here. Volume balance has gotten better. It's not bullish yet, right? This is very bearish right in here. This is a little more bullish right in here. This is very bullish back in here. You can see that's why it uptrended so nicely. Right here, it's a little bit more mixed. You have a huge distribution day. We have some other distribution days, but every now and then we get a nice accumulation day as well, but it's not a buy yet for a swing trade. Amazon, we have Amazon calls, I think, in the options room, and this was the signal right there. So a higher low, and then a takeout of the pullback line above the 50 of the 21, and then it built this nice little base right in here. I mean, I know the lows are getting squirrely, but the highs stayed very consistent right there, about 233. we got in on that break right there of that nice looking volume, and there that's off to the races. PLTR is not quite ready yet. I don't like these big distribution days in here, so I'm waiting for it to look a little bit more bullish on the volume basis. But what I do like is this pattern right here. It's getting tight. It's getting tight. It's in an uptrend. It's hugging around the 21 and the 50 moving averages. The stochastics are down below the 20 line, and they're starting to pinch. The big black major cycle is down near the lows. That's a good place to be. And the the MACD is below the 0 line. That's where we want it. It's starting to pinch. That's what we want to see. So it's close, but not quite there yet. Maybe tomorrow we get, Monday. Apple is still a no-go zone for me. It's broken all kinds of support, and I think this is just a little dead cat bounce. NVIDIA is getting close, but I do think it has a little bit more to pull back just yet. Maybe close up that gap a little bit around 180, 181, and then it should have a couple of good weeks after that. We do like Google. Don't have a position in Google, but I like this little tight breakout, big green stick on good volume, and then follow through for a couple of days. You could buy it here, but I hesitate in saying this, but I think that we might have just one more good week. And Google has probably run most of that upside already. And then, so there are better trades out there is what I'm trying to say. So we did go long Tesla over in the, and this should be a green, over in the options room. We bought some calls this morning on TSLA. They're doing really well so far. I like this little reversal here, pretty good volume. The MACD is below the 0 line pinching, stochastics below the 20 line pinching. And this is what I really like. You've got 3 out of the 4 cycles, all the major ones, are down at the bottom, and a couple of them are starting to curl higher. So you can see when they are mixed like this, you get kind of a mixed picture. But when they all kind of come down at the bottom and roll higher, I'm not seeing a good example of that just yet. But anyway, that's where they're at now. And that typically shows the beginning of a nicely sustained run, and I like the fact that it hit the pink zone and is bouncing today. I think you could buy Avgo as well. It's a higher low. It's underneath a lot of resistance, so it's probably going to have some trouble getting up through the 21 and then the 50 and then the top of the range, and then there's gap resistance up here at 380. But it's down here at 346. You can leverage that with AVGX, and yeah, I think 2 or 3 week hold, and it probably should get up to here 380. Let me see what that looks like on AVGX. There's it's kind of a double bottom, but it's actually a higher low, which is a bullish thing after a pullback, and it's at 46.50, and it has resistance up here at 58.70. So that is a 12-point move on a $46 stock, and that's a nice looking trade. Okay, now the other group I wanted to show you are the retail stocks. XRT is the retail, and it's kind of a strange mix of companies in this otherwise well-established exchange traded fund. And you've got ANF, right? ANF and AEO and Build-A-Bear Workshop. All 3 of those guys, I think, were in Chapter 11 bankruptcy not too long ago. Real, I don't know. The Burlington Coat Factory was in Chapter 11. Five Below has had some troubles along the way. Dollar General, eBay. eBay was horrible for years, and now it's starting to come back. And then you've got a couple of what I would call meme stocks, Revlev and Murphy. So these are the top 10 holdings of that. And I'll show you that they're doing pretty well. ANF, way up there. Now, you don't want to buy it up here. It looks like it's kind of toppy, but Build-A-Bear Workshop is nicely trending higher. It's in a downtrend overall. I wouldn't buy it either. AEO, this one I like. So nice looking uptrend. Power gap right here on earnings. That's where you want to see it. Straight up to new 52-week highs. Nice, soft, little rounded bottom base. And this is a high tight base. William O'Neill calls it that. And typically, he would like to buy it on a breakout of the top end of that range. I like to buy it on a test of near-term support, which would be the 21. And for this is a perfect example how you can drill down to the 2-hour chart and see if you've got a reversal down in the pink zone, and that's exactly what we've got. So you want to buy AEO? What's the name of it? American Eagle Outfitters? Go ahead. I don't know if anybody's shopping in malls these days. I guess everything is done by catalog or online. Let's see. I don't think any of these. Oh, eBay. I wanted to look at eBay. Yeah, so eBay, it doesn't look so good there, but if you look at where it's been, right, it's been in a really nice looking long-term uptrend off of some very deep lows back in the end of 2023. So that's kind of the tail end of the bear market, the last bear market. And it's been all upside ever since. It consolidates and then runs higher for several months, consolidates and runs higher and higher still. Here's your big power gap. Higher still, rounded bottom. Then it did not break out and it went back down on earnings. And now I think it's starting to recover on earnings. Typically, when you see a big gap down on earnings, that acts as resistance. And so, especially right there at that same level, right? It's interesting. Here's your power gap up on earnings, and here's a power gap down on earnings. And it held as support, it held as resistance, and now it's breaking out. So this is actually a positive. It's forming a little 4-bar bullish flag. You need 5 bars typically, for a flag. It's close to that. And I'm not so sure this is ready to go just yet, but it's getting there. Okay, so I'm going to put that on my greens list. It should be, Intel was the other one I wanted to show you. Let me just do some charts, and then I'll look to your, you can start typing in ticker symbols, by the way, over in trading main room, and I'll take a look to see what you're interested in. So we are long Intel calls. It's off to the races. This was an alpha gold alert that came through yesterday. If you remember black box stocks, you'll know what that is. It is it's an alert. We just had one on MST. Forget it. I just sold MSTR and I'm not interested. We sold it up at 160 and change, and now it's 158. So I'm not interested. Hood, however, is interesting. We'll take a look at that. Apple, no, avoid Apple. You're going to see alpha gold alerts on the big mags frequently. I tend to ignore most of those. I'm looking for the ones that get an alert that don't usually get alerts. And we've had some really nice trades in some of those alerts. So I always keep track of the alpha gold alerts, and we had a few this morning. Intel, second time this week, alpha gold alert. We're long already. We went long app when I got the alpha gold alert in the live trading room using the leveraged fund for that, and it is doing well so far. Here's one for Microsoft, but again, I would ignore those big stocks. All right, we'll take a look at Hood. Intel's just great. So it is now in breakout territory. This is, I'm pretty sure it's not all-time highs because it's been down for a long time, but this is a very nice looking uptrend. You have the rounded bottom, always bullish. Here's your V bottom, which didn't hold. Rounded bottom tends to hold and get the breakout, and it came up here for a couple of days. We bought, I don't know when we bought, on that little bar right there. I think it was the inside day, or maybe it was the beginning of that big green bar, or maybe it went up, came back down. Somewhere in there, somewhere around 42, 41.80, 42, we got into the calls, and today is the payday. Let's take a look at Hood. Last time I looked at Hood, and it's pretty much looking the same way it was before. It is in a very weak uptrend. I'd really call it a trading range. This is the line that really needs to break, and it hasn't gotten anywhere near that lately. And more likely, this is the line that will break to the downside. So I'm not interested in Hood right now. It's a great stock to trade and a lot of fun when you catch it, and there's some good leveraged funds you can use to skyrocket your earnings. But man, it's painful to hold something like this when it's breaking down to the downside. You get a big red stick, a red stick, a red stick, and that's not a lot of fun. So make sure you've got the market working in your favor, and it's not today, not for Hood. But we'll put it on a list, right? We'll keep watching it. Gosh, what was the other one? Let's take a look at App. Got the alpha gold alert today, and came back down to the 50-period moving average. Nice looking uptrend, right? 21 above the 50, 50 above the 200. We have a 5-bar base down here off of a big red stick. The big red stick is the one red flag that I mentioned in the room. That's why we're not in it huge. But I like what it's doing here. It's holding near the 50. It did capture the 50 again. We've got stochastics down where we want them. We've got the 3 of the 4 cycles down where we want them, and the MACD is where we want it to be also. So it's probably going to take a little while to get going, but the fact that it has an alpha gold alert and the technical indicators are in the right place is, to me, it is worth taking the risk. Seems to me like there was something else I wanted to show you. We got into FCX, that's doing well. We got into IREN, and it was doing well. I guess it's back down again. Well, it's still up 6.5%, but it was up a lot higher than that earlier today. But this is, again, not the best looking chart, but it is a power play on data centers. That whole space, OKLO is a big one there. VST is a big one. And CEG is another one. And those guys are getting pumped because of some extra government spending going into the energy demand for data centers that was just announced last night. So fresh money coming in. Volume balance down here is very, very good. MACD gave a buy signal down here off the lows, and it is still rising. Stochastic is getting a little bit overheated, but that can last for weeks. And cycles are kind of missed, not exactly what we would want to see down there, but the volume balance and the price look okay here. So we'll just see where that goes. Small position, and so far so good because we were showing a profit. Okay, let me see what you're interested in. All right, we've got some stocks. Let's take a look. TSM. I think TSM, I actually was on my greens list yesterday, and then I noted it's got earnings coming up in just a few days. I'm not so sure I would hold over earnings, although it probably will do really well. And last earnings was, looks like it was a good earnings. That's the green house there. But then it did sell off for a few days. And before that, it also sold off for about 3 or 4 days. And way down here at the bottom, good earnings, but sold off for a couple of days. So let's wait on TSM until after it gets through earnings. But just on a chart basis, it looks great. Really looks great. And if you're already long and you don't mind, seeing, I don't know, 15 points come off, maybe up 4 or 5%, following an earnings sell the news kind of thing, which is what it tends to do. Not that it has to, but that's what it tends to do. Then hold, certainly hold. Today, bullish inside day bar. Volume balance recently has been distributive, so people are getting out of the stock probably ahead of earnings. They're taking their profits. But just from a pure price perspective, this looks really good, and it's got a really good future ahead of it, I'm pretty sure. So as long as the earnings come in line or beat expectations, if they're talking good about the next quarter, then, and they should, right? This is the number 2 chip maker in the world, second only to NVIDIA, and you can't move the sector without Taiwan. So yeah, this looks good. Again, I would wait until after earnings. It's probably going to come down here and test. Might even fill that gap down to 306, but certainly a dip below 312 could be a nice buy entry. All right, what else? LEU, well, this is in that same nuclear space that is doing really well today because of the news. The chart is very much like IREN. So here's your, I'm not sure this, I don't think that is a head and shoulders. It's more just of a rounded bottom base. I'm not sure where the neckline should be, but I think we could put it right there. Breakout, retest, and then nice 3-4 days up in a row on good volume. Yesterday was some give back, what I call back and fill, and then an inside day bar today. This is bullish. If you're not in IREN, you could buy this one. It's pretty much the same play. There are a couple of others in that space. OKLO is the big one, and then SRM, I think, is the ticker symbol of another one that we've traded before. CEG is kind of like some utilities in that space that also do energy for data centers. But this is, I think, correct me if I'm wrong, I think it's a nuclear play. So, and nuclear is kind of the thing. Let's take a quick look at uranium, because usually you see, if you see pricing pressure, yeah, you see pricing pressure in uranium, and this looks pretty good, then that's a good sign that the nuclear reactors, the guys who sell the energy from the uranium, it will also do well because everybody's buying up uranium like crazy. Okay, so this looks good. It's a gap and crap today, but that's kind of expected on the big news, right? Sell the news coming back out of it. But yeah, LEU looks good. And oh boy, you've got a whole bunch here. Let me do these really quick. ASPI. Okay, so it would be, I would say, if this were me, I'd be taking profits. Everything's in a downtrend. It tagged the 200. It reversed. Huge volume coming out. I don't think it's going in. It's probably coming out of this trade. And the volume balance prior to that, not so good. So just a quick look at that. I don't think it's probably going to come back down first and fill in that gap. ASP Isotopes. Well, maybe that's also uranium play. I don't know. I don't know the company. Oost has been getting a lot of chatter on the social media boards. StockTwits and a few guys in my pro trading group have been hot on it, and I have noticed some alerts about unusual call flow, but I think that was down in this area, not up in here. So just technically speaking, you probably are going to see it cool off a little bit, right? Everything's in a downtrend. It's up here in the blue zone, and the mantra is you buy the pink in an uptrend, you sell the blue in a downtrend. Now, so that could be a short-term short off of the reversal bar today. But I think with all of that positive sentiment, you're probably seeing a shift in this whole space. A lot of these guys, like this one did, right? They doubled, tripled, quadrupled in a matter of months, got way up here to way overstretched valuations, and then they came crashing back down. And now you're starting to see, hey, you know what? This space has a lot of good growth, and it's going to be absolutely needed with the increase in CapEx that's coming. And so, yeah, people get back in. But just on a short-term basis, I think you're probably going to see it come back and test the neckline, which is right around 26 and a half. So it's at 28 right now. It's not a big drop. If you can sit through that, I would just sit through it. I wouldn't short it. I wouldn't short that much of an upside with that much volume going in. But if you're not long, I would wait. Just wait a couple of days. All right. Let's look at PLAB, Plantronics, Photronics. Okay, I know the ticker symbol. I'm going to assume this is like a laser tool maker of some kind, but I could be wrong. One of my favorite plays in that space is LITE and LASR. And I don't know if this is in that same space, but those are very good companies. This one looks great. So this is what we call a power gap. It's up on earnings. That's what you want to see. The market has revalued the company. Before earnings, it was a low $20 stock. After earnings, it's a low $30 stock. And the market so far has given a thumbs up to that. So the market is crunching all kinds of data that we don't know about, we don't have access to. We just have to look at the price. And the price is telling us, yeah, this is, it is now fairly valued when before it was well undervalued. Now that that information is out there, now we can trade off of that. So this is your support down here, 32, 21 EMA, came down to it yesterday, reversing back up today. This is actually pretty good for a fairly low risk, longer term hold. The thing about these big earning gaps is that they do tend to carve out trading ranges, and then they get stuck in those ranges for months. That's probably going to happen. But you know, this isn't a bad range at all. You're down here at 33, and the top of the range is 40, and that's almost a 20% move that you can get if you bought it right now. And you would put your stop below yesterday's pivot low, 31.25. I'd probably go down to 30.90, something like that. And then on a closing basis, every time it goes up, you move up your stop to the same amount. And you You may not get up all the way to 40, in the time that you'd like it to, but 36 looks doable pretty easily from where it is now. That's almost a 10% move. Yeah, that's a great looking chart. Power gap is what that's called. And there's a scan in TrendSpider that will give you recent power gaps. Most of them are on earnings. Some of them you just dismiss as not much of a gap. But those are the ones you want to look at, like that one. That's a good one. Kava. All right, Kava. Kava, we used to trade Kava quite a bit when it was, it was on the IBD top 10 list. It was on the leaderboard. Everyone was thinking Kava is the next Starbucks, I guess. And it had a great run back here in 24, right? Off of the end of the bear market, everyone started getting into Kava. It topped out on earnings that day. Look at that gap and crap. That's a trend ending candle if I've ever seen one. And then it just got slammed, absolutely slammed. And it's just been downtrending. Every rally gets sold into, gap down on earnings. You don't want to see that. Here's another gap down into earnings. Don't want to see that. Now, it has possibly bottomed out, because it does kind of look like one of those downtrend ending bottoms. And why do I say that? Because you've got a big green stick on good volume. You have some follow through after that. It gets up to the 50. It doesn't go any further than the 21. And then it forms a new pivot high and a higher pivot low, and now a new pivot high. And you're well above this whole range, and now you're starting to get into this gap. However, it looks to me like it's ready. It's ready, maybe not. It is just into that gap. The 200 period moving average, of course, your granddaddy of all moving averages, is going to probably hold it in place for a while. If I'm long, I think I would just keep moving my stop up until I get stopped out. If I'm not long, I wouldn't be buying it today. More likely, you're going to get a little bit of a pullback. But I'll tell you what, this, my pattern, right? Yeah, I've shown you this pattern many times. The lower lows, lower highs, lower highs, lower lows, lower highs. And then you finally come to the end where you get here's your higher low, right? That's the first sign that the bottom might be in. And then when you break out above the most recent pivot high, as it did a couple of weeks ago, that should be the end of the downtrend. But look, that's now going to be your line of support. And that's down there at 55, and it's up at 70 right now. So it could come all the way back there. More likely, however, this is going to be the support that gets tested. That's 61, 62. And I could see that happening over the next few weeks. So I wouldn't be a buyer. There are much better patterns out there, much better charts out there than that one. But it's interesting. Would be good to see this one start to get back online again. Okay, I can't do all of those. I'll just take the first one, KLRS. We'll just make it one chart per person. And it's 3 o'clock, so I really need to wrap this up. Okay, so technically speaking, I don't know the company at all. It looks like a biotech. You've got a nice looking uptrend, 21 above the 50, 50 above the 200. It's probably a small little float, maybe a heavy short, I don't know, but this one really moves, both up and down. So be careful with this one, but I like the pattern. I like the chart. You've got, this is still not a higher high, but it is a higher low. There's your breakout move. Here's the higher high. Here's the higher low. Pullback. Right in here would be a great place to buy it. If you bought it there, great. Pat yourself on the back. You did a great job. I wouldn't buy it up here. My rule of the big green stick applies here. The exception to the big green stick rule is that if it comes at the end of a downtrend or a pullback, you can buy the first big green stick. But given that this has already come up a long way off the lows, it's gone from 530, it's doubled. It's doubled in just a few weeks. Then you're probably going to get a better price in a day or two. Right? So just be aware of that. I wouldn't get it here. I would wait for it to come down. Usually they come down about 50%, so maybe around 920 or so on a dip. But that's a bullish chart. The pullback looks great. The big move today looks great. It's a hold right here rather than a buy, but it could be a buy again in a couple of days. Let's take a look at Lilly, because I almost got us into Lilly. on that day right there, this was a head fake, pullback, shakeout of weak hands, running of the stops. When you get this little tight range right in here, everybody's got their stops just below, and then the market makers can just flood those guys out. Then it reversed back up. Nice. What I'd be concerned about, however, is we've got a really good market going today, and it's still red. So it's not getting the inflows. It's not getting the love from the market we want to see. But it's technically and fundamentally still a good investment for sure longer term. And I would trade the dips. I don't think I'd buy it up here. This is, yesterday it was above the all-time high. You don't want to buy it up there. You want to buy it on the dip. And you can go over to the 2-hour chart. And when it comes back down into the pink zone, down here, I would say about 1,060, then that could be a good place to buy. All right, let me do these real quickly. CRS. Okay, so this is what I would call a messy chart. It is trending. It's trending higher. Uptrend is good from the LRC, the 50, the 21, the 200. All that is good. But this is, you get one of the, we've seen this before in a lot of charts that are fun to trade, but then they go into several weeks where it's like up, down, up, down, up, down, and it gets really frustrating. And it goes up, so you move up your stop, comes down, you stop out the next day. Really frustrating trading, and you're just seeing a lot of that in here, down in here, and over in here. So I don't like messy charts. I like nice, clean, trending charts if possible. Sometimes the market doesn't give us that. Big red stick yesterday, a big flush out that could potentially be bullish. If you caught it down here in the pink zone, pat yourself on the back. That's a nice entry. Inside day bar today looks bullish. Yeah, I don't know. I think it's probably going to go back up to like 340, which would be a 12-point move from where it is right now. And then a couple of days later, it's going to be right back down to 322. So if that's okay, if you're just looking for a couple of days of upside, then go for it. One more Marvel, and then we're done. Okay, so I've had Marvel on my greens list down here. I like that, the reversal off the 200 period moving average. This pullback right in here into the upper half, the lower half of the LRC that reversed nicely the next day. This is a nice big red stick, hammer candle, big green stick, and you can see how you could have gotten a better price the next day, right? That's the big green stick rule. Don't buy the big green stick, buy the next day on the intraday dip, and you're 4 times out of 6, 2 times out of 3, you're going to get a better price if you just wait a day or two. Now, for a short-term trade, however, and I had this on my radar earlier, I just thought, you know what, there are better trades out there, but the little hammer into the pink zone, nice uptrend. It's been, I would just call this a trading range. It is in a trading range. It's not really trending over the last 4 weeks. That gap down, you don't want to see that. It was a gap up on earnings, and then I don't know what happened here. I remember the headline, but I don't remember the specifics. And that has set it into a trading range, and that clearly is an area of support around there, 92.50. I'm sorry, resistance, 92.50 resistance. Support is down here at 82. And so that's, a 10-point range on a $80 stock is pretty good, right? Very, very good for short-term trades. You're looking at a 12% return. So I say you could buy it to be a little bit safer. I would not buy it today. Buy it next week on a rally above today's high, which is 84.45. Buy it at 84.50, and put your stop below the 80, like 80.30, something like that, for a fairly tight, low risk trade, and ride it up until it gets up here about 92.50. Yeah. But I don't think it's going to get into that gap. And the danger is if we do get a market pullback in February, it's probably going to fall lower than that support line. All right, guys, I'm going to let you go. I will produce the video, put the link in the room. We'll get back to trading. We've got an hour. I don't think we're going to add anything now, and might even take one off, but we'll see. I do like what's happening today. It's been a beautiful day. God bless everybody. See you back in the room in just a few minutes. Bye for now.